Let's discuss about all the journal entries that we have learned over the course of this course. So this video is primarily on the journal entries compilation. We compile all the journal entries that are relevant in respect of property, plant, and equipment. So basically, we will go through the general journal entries because there may be specific cases where, for example, grant or business combination, their journal entry may differ. So it's appropriate that those discussions should happen in that courses itself. So we will discuss the typical journal entries in respect of property, plant, and equipment. The first one is related to the acquisition of PP&E. That's fairly simple journal entry. So the journal entry is PPE account debited to either bank as an outflow or payable as a standing payable in respect of PPE acquisition. So this is a fairly simple journal entry in respect of property, plant, and equipment. Now let's move on to second journal entry that's related to the recording of depreciation expense. So when we record depreciation expense, the journal entry is depreciation account debited to accumulated depreciation. So this is the journal entry in respect of depreciation expense. And this particular account will go to the profit and loss statement at the time of closure of the books of accounts. So these are two journal entries. Now let's look at the third one, the journal entry related to revaluation. Revaluation. The first thing we will discuss is it's related to the initial revaluation. So I will jot down the detailed journal entries rather than in a summarized way. So the first entry in respect of, I will bifurcate the screen into two parts, gain and loss. So the first general entry would be the PP&E account debited to gain on revaluation of PPE. This is the first journal entry. After this, the gain will be transferred to the OCI. So the entry would be gain on reval of PPE to OCI. OCI means other comprehensive income. The third journal entry would be transferring of OCI to revaluation reserve. So the entry would be OCI account debited to revaluation reserve. So it is basically a transfer entry. It's basically a transfer entry. No such account is open. This is just a transitionary account prepared at the time of closure of the books. So OCI will be transferred to revaluation reserve. So if we can see that if I'm going to take the shortcut and present this journal entry, it would look like gain on loss set off each other, OCI set off each other. So the net entry is PPE account debited to revaluation reserve. But this is the flow of journal entry, which I want you to understand rather than going to the shortcut. The same the case with the loss, but when there's a loss, the amount is transferred to P&L directly. So loss would be loss on a reval of assets account debited to property, plant, and equipment. It value declines. The second journal entry would be profit and loss statement. It transfer the loss to profit or loss statement account debited to loss on Reval. So basically, it's a transfer. If I say this is gone, the P&L account debited to PP&E. Basically, this is a similar to OCI, uh, and we use this as a transitory account at the time of closure of the financial statements. So these are three major journal entries that is relevant. Sorry, four journal entries that are relevant in respect of property, plant, and equipment. Now let's move on to two more journal entries. The fifth one would be the recording of disposal. The recording of disposal of property, plant, and equipment. The first entry would be the bank account debited or receivable account debited if we are yet to receive the amount. Receivable account debited to PPE at cost. The cost is debited. Now, in respect of this PP&E, we have to debit the accumulated depreciation and accumulated impairment that are lying as a credit entry in the PP&E, the gross PP&E. So we reverse the accumulated depreciation and accumulated impairment losses in respect of this particular PPA. After setting off everything, we may have a loss. So this would be loss on sale of PPE, or we may have a gain to gain on sale of PPE. So this would be the journal entry. So I'll give example. It won't take much time. Suppose the book value of the cost of the asset is 100,000, and the accumulated depreciation is suppose 40,000, and accumulated impairment loss in respect of that particular asset is 10,000, and we sold the asset for suppose 60,000, and in second case it's 40,000. Now in respect of these two, the entry will look like under scenario 1, we we are yet to collect, or we are going to collect 60,000 rupee or $60,000. Suppose we collected the amount. Bank account debited 60,000 to PPE cost. My cost of the asset was $10,000. Oh, sorry, $100,000. And in respect of that, the accumulated depreciation was 40,000. And in respect of that particular asset, the accumulated impairment loss was 10,000, which means a net book value was 50,000 at the time of disposal, and we are able to dispose of the asset at $60,000. So definitely there's a gain of $10,000. So here I'm gonna go and record to gain on sale of PP&E at 10,000. See, 110,000 and 110,000. So this is in respect of gain. Now let's move on and record the second journal entry. It related to suppose we sold the asset for 40,000. Similarly, we are going to receive, or we have received 40,000. The accumulated depreciation in respect of that particular asset was 40,000, and the impairment in respect of that particular asset was 10,000. To PPE 100,000. So we are able to dispose of an asset whose book value was 50,000 at 40,000. Net book value was 50,000 and we are able to dispose of at 50,000. Hence, sorry, at 40,000. Hence, we have a loss of $10,000. Now, how are we going to record that? We're going to add one line item here as loss on disposal to be 10,000, 20, 80, 100,000. So this is a journal entry in respect of recording any disposal of PP&E. Last journal entry would be the recognition of impairment losses. Fairly easy concept. The same as recording depreciation. Same as recording depreciation. So the journal entry would be impairment loss account debited to accumulated impairment. So this will show as a deduction to the gross carrying amount of the asset, and the impairment loss will further transfer to the P&L. So the journal entry will be P&L account debited. This is basically a transitionary account, and we're transferring the impairment loss to P&L for that particular period. To impairment loss. So this is the journal entry in respect of recording of impairment losses. So in a nutshell, we looked at 6 major journal entries. The first is respect of acquisition of PP&E. Then we discuss about the recording of depreciation expense, the journal entry for recording depreciation expense. After that, we move into two different phases of revaluation. In one case, we discuss about the revaluation gain. The another case, we discuss the case of revaluation loss. And please note that we only discuss about the initial recording of the revaluation. For subsequently, we've already covered that specifically in a few videos on revaluation gains and losses. So I didn't discuss those things as a repetitive part. The fifth part we discuss, or fifth journal entry we discuss, it in respect of disposal or de-recognition of the assets. We also look at the two facets, like there's a gain and there's a loss. So both the journal entries we've covered. And last but not the least, we discuss about the recognition of impairment loss. So these are the seven major journal entries that will come across at the time of accounting for PP&E. And one more journal entry that just came to my mind. It is in respect of CWIP, capital work in progress. So all of the capital work in progress means you are constructing an asset. Simple as that. You are constructing, suppose, this asset, and you are putting all the material, labor, overhead that's supposed to be capitalized. After the construction completes, we need to transfer the CWIP to the main PP&E. What do we mean by completes? We already discussed when it is the intention, the concept of intention, when it is ready in the purpose when we intended to. We want to use it in a particular location. To all the costs that we have incurred to a particular location and to bring the asset into the particular condition to make it ready for use, all the costs are capitalized, and till that part the amount lies within CWIP. And another point I want to discuss is there is no depreciation in respect of capital work in progress. It's a work in progress. How can I depreciate it? So all the amounts that are lying in the CWIP, there is no concept of depreciation. For auditors, it's a really important point to look into whether do we need to transfer the amount lying in the CWIP to the PP&E to kick off the depreciation expense. Now, the journal entry in respect of recording all the expenses or all the outflow of resources in the CWIP would be the capital work in progress account debited. You debited all the CWIP to, suppose you have consumed your material, to because you consumed all your labor, and to accounts payable basically to cover up these if these are not separate. So you transfer or you transfer to the credit side all the resources that you have utilized and all the payables in respect of CWIP. So after you complete the CWIP, after you complete and bring it to the desired location and condition, the journal entry would be PP&E account debited to CWIP. The capital work in progress transferred to main PPE after completion of the conditions in respect of transfer. So these are some journal entries that you need to look into in respect of PP&E.